recommend passwords on all meetings, which we do. And then they have that waiting room function where you have to approve everybody coming in. And so now that I can see a lot of people are back on, I'm going to go ahead and turn on the waiting room. And then I don't know if Amanda, if you're an admin, just help me monitor that so we can let people in. It's hard though, because it just shows you who's in the waiting room. So if you don't know them, you don't know who you're. So I'm going to turn it on now.
Yeah, I do not have admin rights, but I typed out a list of who was here before so I can see the names.
Okay, and we will we'll basically edit the recording and then send the 2 recordings of the conversation and then all the relevant documents. So hopefully anybody that got kicked off before can still get the information they need. Lynn said she did not get the updated link. So let me send it to her. If you got the updated link though, and you're here and there's maybe people you invited that might not have it, please forward it along. Golly. Yeah, we haven't had that happen before, so it's pretty nuts. That being said, let's pick it back up, and if you two could maybe discuss specifically the FTE look back and then also the exceptions. I'm going to spend a couple minutes just sending that revised link to a few people that have texted me.
Oh, you want me to go?
Sure.
You had posed the question about a reduction in FTE. Mm-hmm. So the first step at any point in time is to identify what your current FTE count is as compared to the lookbacks. And you've got the 2 lookback periods, February 15th to June 30th of 2019, the average FTE count, or January 1 through February 29th, 2020. So those are your 2 options. And then you compare that to your average FTE during the current period. A lot of businesses, whether they were forced to shut down or whether they made a decision to shut down early on in the loans, if you got your loans in mid-April, a lot of clients were not able to, they didn't have hours for their employees to work. And so if they chose not to pay them not to work, then their FTE count was lagging from the get-go. And so there's no provision against that. So in other words, if your FTE count is low for whatever reason, that's your FTE count. And if you don't take action, then whether it be trying to find ways to increase hours of your employees, or letting time go by so that your average goes up, then that's something that you'll have to deal with. But I think Byron's going to talk about the exceptions, which was something they added later.
Yeah, there's basically a couple of exceptions that that they've added in there. One is that you've tried, but you haven't been able to rehire, qualified employees if you laid people off or furloughed people or whatever, that sort of thing goes. That was one of the things that they had there. And we can talk a little bit about it later, but our advice is that you document those attempts to rehire. And then the other one is if you were unable to return to business, a lot of our restaurant customers fell into that category where they just couldn't open and so therefore couldn't really bring employees back in. And so if you've got that as an excuse, that's also an exception. And here again, we're recommending that you actually document those with either orders that were issued by the municipality or the state or the CDC or something of that nature. And there's lots of sources for that. You can use newspaper or whatever also. So use those particular exemptions in there. Here again, like I said, if you tried to restore an employee and and they turned it down, then you do need to go ahead and document all of that as best you possibly can. We don't know at what level the SBA would investigate something like that, but it's probably just better to have the documentation in place to cover that. So.
We had discussed a little bit about, if you've tried to offer somebody their position and they don't want to come back to work. And I know we have quite a few, like restaurants and retail, for example. This has been a big pain point. And so if you have made somebody an offer, best practices would be to document the offer that was made, document the discussion or when they basically turned it down, document, the date you talked to them, what was talked about, what offer was made, and that they said no and that they didn't want to come back to work. And keep that in your records, because it won't count against you for your FTE count if you have been trying to rehire. And so I know some employers feel like they're kind of in a difficult position, because then the TWC, for example, will more than likely withdraw their unemployment because they have been made an offer. But we're recommending that you do document that. Kim, do you want to elaborate that on, at all?
I would just say that.
Does anyone know Carolina Camacho?
I'm sorry?
Carolina Camacho, do we know? Does anybody know that person?
No.
Okay.
She was on the first list.
Okay.
Yeah.
I'm paranoid now.
Yeah.
All right.
So ideally, you would have extended an offer letter, and either they didn't respond or didn't return, or they said they weren't going to return, and you document that. But I would not discourage people, if you didn't make a written offer and the time has already passed, that a certain employee, they left work, didn't come back, or you verbally or texted them or whatever and said, would you consider coming back, and they didn't. I would just encourage you to keep a log and document for your own internal purposes, so that you can remember and have that in your file. Because if I'm not mistaken, Byron, that only comes into play if it's contested. So it's not like you submit that. So you just want your file so that if there is an investigation, that you can back it up and say, these were the things that happened.
Right.
Particularly if you've got somebody else that can corroborate and say, yeah, I was the manager and I extended that verbal offer to that person.
Mm-hmm.
I would also add too that if someone turned you down on that offer, and you go out and you offer the job to someone else and they take that job, then effectively you've kept that same FTE in place, even if the person you tried to hire back. So it doesn't have to be the exact same person, but they're concerned about the job numbers, actually, is what they're concerned about.
So, Shannon, I saw a question earlier about this, and since Byron's talking about, he's talking about FTE count, and a 40-hour-a-week person equates to a 40-hour-a-week person who may have left voluntarily. So that equates. I think the question I saw was on the wage look back. Are you only dealing with the employees that were employed with you during the first quarter? In other words, if you didn't hire them until the first quarter was over, you don't have that look back.
Correct.
And I believe that's the case. So if as you go through the application, you have to complete compensation information for each individual employee, and then you have to show the reduction of less than 75% of, if there is such, 75% of what you were paying them in the first quarter. So that's where that comes into play.
Correct. Byron, can you talk about now that there's a Flex Act, that now business owners can qualify for forgiveness with a reduced FTE count? Can you talk about kind of the requirements to still potentially qualify even if you had a reduced FTE count?
It goes back to those exemptions that I talked about earlier, that if you have a reduced FTE account because you tried to rehire, but you were unable to rehire people, then that's an exemption. And here again, you just need to be able to document that. And then the other one was, as I said earlier, is if you were barred from being open during that period, then that exemption also exists. So and here again, you just need to have the documentation to cover both of those exemptions.
Okay. Does anyone have questions? I'm looking. I don't see any questions in the bottom left, but if anyone has questions on that specifically, because I know we have quite a few that the FTE count will not be realistic for them probably through the end of the year because of their lower business volume. So that was something I think that's really helpful. And then we hit on the employee part. We talked about documenting FTE exceptions. So if an employee refused to return to work, we did post at the bottom real quick the link for the TWC. So if you have a question, their number's there, and you could reach out to them if you have a question. But also there's a TWC fraud line. So like if you have someone, for example, that's collecting unemployment and is refusing to come back to work, you can notify them there. So there's a question at the bottom. Does the bank send the initial request for the information to their client? Byron, you guys are probably reaching out at some point to your clients to ask, but are you, for the most part, waiting for your clients to kind of come to you when they're ready? Or how are you guys managing that process?
Pretty much. I mean, most banks, the volume was pretty daunting on these. So, and we've tried to send out blast emails to folks, just kind of keeping them up to speed as to what's going on and everything. But we've pretty much allowed our customers to apply with us on that. We've given them a little bit of information about what we think is going to be required, and I guess I should probably touch on that a little bit right now, is that the real truth is that we don't have a guideline at this point in time from the SBA telling us what they expect us to do. We have some general guidelines that were issued early on, but they're by no means, these are the 5, 6, 7, whatever things that we want your bank to do before they submit a forgiveness application. So we don't necessarily have that right now. We're taking those applications in, but we're not, we're actually not submitting anything at this point in time because we don't have a solid guideline from the SBA or the Treasury at this point in time.
So for documentation requests, even though it's still up in the air, right now we've been advising people to be tracking kind of in a weekly spreadsheet, basically all of your qualifying costs, including payroll. You also can, it's probably less of a factor now, but it said accrued or paid expenses. So if you had let's say a timing difference, if you had accrued wages, they were counting that as well. And so we kind of just have an Excel sheet where we're tracking basically every week the activity that qualifies. And then we're keeping basically all the payroll summary records for that. And then we're also tracking it by person, so we can show that look back in Excel. But overall, Byron, is there a certain package or information that you're recommending now, knowing that it might change? Like, these are the things that we want kind of in this packet when you're ready.
Yeah, we think there's 4 categories right now that you're going to have to meet, or your bank's going to have to meet. One is just an eligibility category, and I think a lot of that legwork will be done by your bank, because it's things like, did you meet the size standards? There's usually a revenue standard and a number of employee standard for the SBA, and so those will fall, I think, pretty squarely on your bank, and they'll use your head count for that. The second one, which is at this point is a little bit vague, is proof of the necessity for the loan. So in other words, did you have other alternatives that were available to you? what kind of hardship was going to be placed upon you, that sort of thing. So I would think that things like your financial statements showing drop in revenues, any kind of internal business reports, things like that that you have that show your volumes decreasing, those types of things would be beneficial, I think, on the necessity side. And then on the actual use of the funds, and really this is probably the most important, and Shannon already alluded to that, is you do need to be tracking what you actually did with the money itself. So your payroll, ideally your payroll provider can provide that. I know that Business Financial Group can do that. If not, then you may have to produce the checks, which that could be voluminous, particularly if you're using the 24-week period, covered period. And then copies of checks, canceled checks preferably, canceled checks, and maybe even the bills for the rent, interest payments that you made, utility payments that were made, those types of things. Now, if you happen to borrow the money from the bank that you have your deposit account with, a lot of that information will already be available to the bank. So you might consult with your banker on that, and they could just pull that for you. But you need to do that. And then as far as the seeking the forgiveness part of it, then you just need to make sure that you have payroll tax information, things like that are going to be requested. Because I think what's going to happen on this is that particularly if you're an early applier for forgiveness, is I think that there's going to be some rule changes, or there's going to be some unknowns in that, and so your bank's going to be asking you for additional information, that sort of thing, because they're honestly at this point, banks are going to have to feel their way through this process too.
So from a banking perspective now, like if somebody provided you all the documentation, for example, do you have enough guidance from the government right now to even submit for those, or would you all just be holding them and waiting until they give you kind of the final word?
We're holding them right now. We're communicating with the SBA and asking for that guidance, but the SBA's, as you can well imagine, is kind of drowning right now. So those responses are very, very slow to come. They do have a hotline that we actually submit questions and things to, and we can get answers on those. But when you're asking about a big picture process like this, that answer has been pretty slow to come.
Okay. Can we pivot a little bit and talk about the cash compensation maximum allowable for employees? And then can we talk about non-owners versus owners? So let's first talk about non-owner employees. And Kim, do you want to elaborate on this piece?
So originally, on the 8-week period, it was set with a compensation max for everybody, owners, non-owners, employees, at $100,000 over 8 weeks. So it was 100,000 divided by 52 times 8, and basically that's 15,385. That was the max. And then when they went to the 24-week period, then they also said you can prorate the $100,000 max over the 24-week period. And so there's a couple of things questions that came out of that. One had to do with owner compensation. They came out with a follow-up ruling and said that owner's compensation is going to be capped at $100,000 divided by 2.5 months. And I think that's, I don't know the math, but it's like 20,872, something like that. And so owners' cash compensation is capped at that number. Let me see if I've got it. Yeah, 28,833. So the other thing that they said was that where the interpretation in the past was that health insurance for owners was allowable, that's paid by the employer. Under the new ruling, it is not. And their rationale is that with a flow-through owner, the health insurance is taxable, and so it's a part of your cash compensation. We take exception to that, don't agree with it, but it's the rule. So now, under the new rule, owner compensation is capped at $20,833, and you cannot include, on top of that, health insurance premiums. For employee non-owners, and the only examples that they gave in the ruling was the 8-week prorated and the 24-week prorated, which 8-week was $15,385 and the 24-week is $46,154. So if you go all the way to 24 weeks, then you should still be able to include costs for employees up to that $46,154. Then the question comes, well, what if we decide to make our end date on the 16th week and we don't go to 24 weeks? Would I be able to prorate that $100,000 for my employees over 16 weeks? Well, it doesn't say that, and we think that there may be more guidance coming that says you can. In the rule, it says that it's $100,000 prorated over the covered period. And then there's a period at the end of that sentence. And then it gives the example of 8 weeks and 24 weeks. So we've compared notes with a number of advisors, including both of you, just to see if we would all agree that you would prorate the $100,000 over the number of weeks that for which you're counting as your covered period. So if you shut down at 16 weeks and say that's going to be my end point, then you should be able to apply employee cash compensation at $100,000 over 16 weeks, whatever that comes
Yes,
to.
that's what we're doing too. We're basically annualizing it over the period. So however much you're paying kind of in that period, whatever that would be annualized over that period towards that 100 annual. So that's the stance that we're taking as well. Now let's talk about owner employees. So owner employees is defined as anyone that owns more than 20%. So the maximum allowable compensation for the 8-week period was up to $15,385, and then the 24-week period is up to $20,833. So that's something important to know, is that owner compensation has a different threshold over a 24-week period. And then also, Kim, would you mind giving the update about, I know health insurance and benefits has been kind of a talking point. So if you're taking someone's gross pay, owner or employee, when do you include benefits like healthcare and retirement, and when do you exclude healthcare and retirement?
So for employees, any employer contribution to health insurance premiums, including HSA and retirement plan, should be allowable. For owners, the health insurance premium is not allowable, that's a change. And then the employer contributions to the owner retirement plan, we believe is allowable. There's not been an exclusion for that. The one caveat to that, that I believe the SBA has interpreted, is that if you make whether it's 2019 or 2020 401k contribution, which is allowable to be forgiven, then you may lose the deduction for that from your business. And that's consistent with all expenses that were being used for forgiveness.
Are you interpreting that as basically for a sole proprietor, would their max amount that they would be allowed to take be the $20,833? If it's a sole proprietor, like how much of their own compensation can they apply to that?
So I think the $20,833 would be their max, but then on top of that, if they made sole proprietor, I'm assuming that if they made a contribution to their own retirement plan, that would be considered an employer contribution. So that should be allowable.
Yeah, but it would count towards your 20. You wouldn't be able to add it on top of. So you'd be maxed at like your total compensation of 2833, including retirement and benefits. We think.
So for non-sole proprietors, if you're an LLC or an LP, I think that the retirement plan contributions would be on top of that, where the health insurance premiums would not. You would not be able to include those for owners.
Okay. We'll send out that too when we send the email. We'll kind of put like sole proprietor, here's kind of max limits, health insurance, retirement, C Corp, S Corp, because it is different for each one and it's pretty confusing. So we'll try to summarize that somehow when we send that. I had in my head when we were talking about benefits, something that I wanted to talk about, and now it's left my memory. I'm going to go back through our notes real quick, make sure we've hit on kind of the highlights. Does anyone have questions that we haven't addressed?
Let me hit on one point when Byron talked about the exceptions. You and I were having this conversation before the call started. And so when you get down to, you've identified that there were 15 people that you extended offers to and they didn't accept them or they voluntarily resigned. So those should count as exceptions. But then the question comes in, how much FTE credit do you get? Well, if they were 40-hour-a-week workers in the whichever look back period you're looking at, you're measuring to, then they would count as a full FTE exception as well. But if they were only working 20 hours a week average in say your look back is January, February of 2020, then and you laid them off for 2 weeks and then you offered them to come back, but they didn't come back, then the conservative approach would seem to be that you only count them as a half FTE because they were working half full time. They were working 20 hours a week. So you wouldn't count them as a full time, as one whole FTE. And so I'm just thinking that that's a more conservative approach than so that you kind of protect yourself if that gets challenged. And then the other part about that is I think there's some strategy involved in whether you use the actual fraction. In other words, less than 40 hours a week, and you're going to determine what fractional number that is, or use the 1/2 FTE as a default. And I think you'd have to be consistent doing that between the covered period and the look back. But you might want to experiment with one or the other to see which gets you to a more favorable outcome.
Okay.
All of that to say, and I know you made this point at the beginning and we're going to reinforce it at the end, but all that to say that unless you've got everything tied up in a box with a bow on it, take time. Time is on your side and you've got time to pull all your documentation, look for new ruling that's going to come out, make sure that you've done the math and the calculations correctly. You've had a second set of eyes look at it. You've got plenty of time to make that happen.
Mm-hmm. Does anyone have any other questions, or I can unmute, or if you want to post anything additional? If you think of anything that we didn't cover, or need a clarifying comment on something, just shoot me an email. I'll put my email on the bottom really quick, just because everyone might not have it. So if you want to shoot me any notes, we're going to be compiling kind of the questions, answers into an email or document that we'll send out just to sort of summarize the points from the meeting. And then we'll also be sending a PG rated version of the presentation out via link. So if you want to send that to somebody, we'll make sure that it's edited appropriately. I do apologize for that. I'm pretty embarrassed, honestly, but thanks for everyone just being flexible and jumping on the new link. So I hope everyone has a wonderful weekend. Thank you, Byron and Kim, for your time and just for your partnership working through this. We really appreciate it. And enjoy your weekend.
Have fun in Arizona.
Thank you, Shannon. Thank you, Kim.
Bye, everyone.
Have fun.